Hi, I'm Peter Rose, founder of Longwood Currency Trading. A warning for high leverage Forex trading is the topic I'd like to discuss today, and it's an important topic that if you are trading Forex using 100 to 1, 200, 500 to 1 leverage, there's some real issues that you need to be aware of as you think about how you're structuring your trading. It's mid-January 2026 on a foggy day. Amazingly, it was sprinkling, a little bit of sleet involved in that. We had some cold temperatures a week ago, and now they've warmed up enough that instead of snow, we get rain. That's rare for January in New England, where I live. And so we get the wood stove going and a cup of coffee and a topic that concerns me because almost everyone that I talk with who have started getting involved in the Forex market and have, let's say, less than a couple of years of trading, they're all trading at 100 to 1 and 500 to 1 leverage, or they're trying to. There's two reasons why I'm warning against high leverage Forex trading. The two are risk of ruin, and the second is regulation. Let's talk about risk of ruin first. Risk of ruin is a mathematical term, for probability and statistics term, based against game theory. Trading isn't a game, but you model it based on the mathematics of game theory. So it's a game, but not in the sense of video games and gambling games and shit like that. Game theory is a serious mathematical analysis. And in that analysis, there's a term called risk of ruin, which is a probabilistic statement based on the probabilities and statistics of the game involved and those rules as to how likely it would be that you face losing all your money. Losing all your money is the risk of ruin, and it can be calculated. Do we need to worry about calculating it? No, because it's evident if you think logically. If you're 22 years old and you got some guy blowing smoke up your ass, I can't help you. My videos are based for folks that are serious, that are looking for trading in the Forex market to replace their job income, not screw around and buy a Lambo with it or party in Cabo and all that other kind of stuff. So when we're looking about risk of ruin, we're talking about a 35-year-old or a 30-year-old serious person who's thinking about getting involved in currency trading, and nobody's talking to them about the risk of ruin, which they would respect because they have enough maturity at that point. Hopefully they're out on their own. They bought a house or condo, or they're renting a substantial rental obligation. They've got bills, car payments, maybe kids. They're aware of the reality of life that the younger folks sometimes miss. But the importance of it has to be, I'm going to trade Forex and I need to know about risk of ruin. That's the order of complexity and analysis to break down whether you're going to be willing to trade Forex or not. If you're listening to most of these folks that are out there that are teaching you to trade at 100 or 200 or 500 to 1, and they're showing you how to be successful trading a $500 account to $3,000 or a $100 account to $400 or something like that, it's very possible to get away with that and not get too jammed up because, well, if you lose $500, you don't think anything of it. It's all part of, it's like going to a poker game and losing your money. You don't think anything of it. You come in and play the next game. You refund your bank. So you take another 500 and you throw it in and you lose, or maybe you make a little bit more. Maybe you take the 500 and run that to 2,000 or 3,000 and you cash that out and buy a down payment on a car. And then you take another 500 and you run that to 3,000. That's all relatively plausible with a lot of the people that are teaching out there. They're teaching how to take small accounts and run them to large accounts. And they don't really understand the definition of a large account. A large account Well, a small account would be $30,000 in the Forex world. And the reason I say that is a $30,000 account is a small account if you're trading stocks. Because if you're trading actively in the stock market, you are what's called a pattern day trader, and you need a minimum of $25,000 in order to do that. And so you just take that, and there's a logical reason for that. There's a reason why that rule is there. We don't have that rule in the Forex market. You can trade with 50 bucks, but you're not trading. And if you're trading with $500 or $1,000, if that's all that you can afford to bring into it, Forex is not the market for you to trade in. It's just too risky because of the risk of ruin. So if you're learning how to trade 500 and turn that into 3,000, is $3,000 going to impact your life income? You realize that at some point you're going to trade the 500 to 3,000, then you're going to lose the 3,000. Maybe you've done that 2 or 3 times and you're going to lose it. You're going to bump into that somewhere along the line. The mathematics of it shows that the probability of risk of ruin based on high leveraged small account trading is very high. Secondly, you are learning different skills to manipulate small accounts and run them to larger accounts, quote, larger. If you're starting with $500, which is really small, and you run it to $3,000, that's not large. That's small. So don't kid yourself on that. Even if you make $10,000, what are you going to do? Do you take the $10,000 off the table and then start with $500 and build to $10,000 again? How long would it take you to do that? Say it takes you, I don't know, 6 months, a year, at 200 or 500 to 1. At some point, you risk of ruin. And the tendency will be, oh, I got $10,000. Now I'm going to trade the same way with the 10,000 that I did with the 500. And now you turn the 10,000 into 20,000. Well, I took a $5,000 account and just about doubled that in 3.5 months. And I was using 10 to 1 leverage, not 100 to 1. But I've said many, many, many times on my videos that it would probably not be realistic to take a $50,000 account and take that. I did 5,000 to 10,000. I doubled the 5,000. So would it be reasonable in 3 months to take a $50,000 account to $100,000 in 3 months or a year or something like that at high leverage? The mathematics show that it's possible, but the risk of ruin based on the size of the account changes, and there are reasons for that. The same way that in physics we look at resistance for a piece of wood sliding down an inclined plank. If you have very little resistance on that inclined plank, that board will slide right down. But if you chew up the board and it has spurs in it and stuff, now the thing will slow down and take longer to slide down that plank. And so changing the environment, the texture of the wood that is on the inclined plank changes the dynamics of the success of quickly moving the board down the plank. And those rules are true in non-physical areas as well, such as trading and taking a $5,000 account to $10,000 as opposed to taking a $50,000 account to $100,000. There's a resistance factor there, even though it's not seen. I mean, come on, look, you go to quantum mechanics and there's stuff that you can't even conceive of that's going on, and yet they direct your ability to understand thermodynamics and a hot cup of coffee better. When you are trading these small accounts and making progress with them, you are not learning how to trade. You're learning how to beat the game of the risk of ruin on small accounts. And your mind says, oh, if I lose the $500 or $1,000 or $2,000, I'll just replace that $2,000 and look what I could do with that. You need that money now. So you need to learn not how to trade small accounts. You need to learn skills to trade small accounts reasonably so that you can transfer those skills when you do have a $50,000 account and you're trading at 10 to 1. How would you double that? Can you double that? Sure, you can. The math shows you that you can. But there's certain conditions and characteristics that you have to have. If you're stupid, you won't be able to follow the rules the correct way and trade. You know, that's just the fact of life. But when you face taking all of your money and putting it at stake, a $30,000 account, and you learned how to trade this Mickey Mouse kind of way, and now all of a sudden you find yourself with a $30,000 account, and you think you're going to trade the same way, it's not going to come out well for you. I'm sorry, it just won't. I've got a degree in physics, almost a minor in math. I did a 40-year stint as a real estate investor, retired a millionaire because of my real estate investing. I was a software engineer for 33 years. I think I've been around the block before and I understand what I'm talking about. And I'm warning you that the risk of ruin is probabilistically very, 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 very high in leveraged Forex trading. Okay. Let's move on to the second topic. We just covered risk of ruin. Now let's cover regulation. Those of you who are trading at 100 to 200 or 500 to 1 leverage are not trading at a United States broker. You'll see that a lot of the US people that are trading at high leverage have moved to a country that allows you to trade on a platform that's in a country that allows that high leverage. Why do you think that you can't trade high leverage in the United States? If you are trading in another country that allows you to trade at 100 or 200 or 500 to 1, at some point, that country may very well institute the lower leverage requirements, just like the United States did, to protect the United States citizen. We're not going to allow you, even though you're stupid, to risk money at 100, 200, or 500 to 1 leverage. If you want to risk your money at 10 to 1 or 20 to 1, maybe even 50 to 1, I think that's the limit of 50 to 1. We'll allow you to do that. You'll get beat up and you'll lose your money, but you won't maybe lose it as fast or before you smarten up. But if you're trading at 200 or 500 to 1 leverage, you're going to lose all your money really, really, really quickly. Adverb. So that regulation may come to your country. So you say, well, that's okay. I'll just trade in another country that allows it. Do you realize what happened during the Swiss financial crisis to 95% of the brokers, currency brokers? Oh, guess what? Not only did they go out of business, but all their clients lost all their money. There were only, I think, 2 major brokers that made their clients good because they were solid companies. That's risk of ruin on a massive scale. So think of it this way. If you're trading at high leverage, let's just say that you stop trading at high leverage and trade at 10 to 1. What are you going to say to yourself right away? What have the crazy demons out there that have been talking to you about how great Forex trading is and you're going to make enough money to drive a Lambo? How the hell are you going to pay for it? It costs you $700 just to get the oil change. How are you going to trade at 10 to 1? You need $10,000. Well, in the US, you need 5% of the cash value at that time for margin. That's another requirement. Most of the countries out there that are allowing this really high leverage, they might have a 2% margin requirement. 2% is nothing. That's like buying a $100,000 house for $2,000. If you know anything about real estate, you know that's a kiss of death. If anyone sells your house and the bank gives you the ability to get it for 2%, your risk of ruin is astronomical. So if regulation was to change tomorrow and you had to trade at 10 to 1, what would happen to your trading results? Well, instead of making those magnified dollar amounts, you're not going to make that. You're going to cut those by 5. You're going to divide by 5. That's your profit. So now you're used to trading these crazy ways so you can take advantage of that big leverage, but you don't have that big leverage. So now how are you going to trade? What are your rules? Are you going to be able to trade at 10 to 1 and be satisfied with the dollar results that you get from your trading? No, because you've traded at 500 to 1 for 3 years or whatever it is, and now you don't know how to set up a trading plan. You probably don't need a trading plan to trade at 500 to 1. Why would you need that? Because it's gambling, because the risk of ruin is so high. It's almost an absolute. And that's the difference between investing or speculating and gambling. In investing and speculating, you have methodologies to avoid risk of ruin. In gambling, you don't. The mathematics show that you will, at some point, many times, have risk of ruin. And so changing the regulation changes the rules as the way that you're going to have to trade. Are you going to be able to trade? No. So your risk of ruin now goes up because you don't know what you're doing. Because it invalidates all of your learned trading skills by coming down and trading at 10 to 1. The risk of regulation coming to the Forex markets in the years coming along, I would say, are very high. And of those people that still continue, countries and brokers that continue to offer high leveraged accounts, they're not well capitalized. And when the shit hits the fan, they're going to go under and you're going to lose all your money anyway. And they wouldn't even be trading. It's just, if you have questions about this stuff, I'd be happy to chat with you about it, either through email or maybe set up a video conference. But most folks are just looking for the magic pill. I'm trading at 500 to 1. I just need that. What's your, God, how many times do I get that? What's your strategy? I'm trading at 500 to 1 and I'm losing here and there. So I just need my strategy tweaked. No, you don't need your strategy tweaked. You need to put your head in the toilet, flush it real quick, come up for air, and then start over again. That's what you really need to do. A warning for high leverage Forex trading. 2 very, very real things that you need to consider. Risk of ruin and a broker or a country that regulates leverage to like what the US is, 5% down margin and 20% leverage. See if you could manage your trading under those conditions, because you may be faced with that. If you can manage your trading under those conditions, or you can see the light, send me an email and I'd be happy to talk you through some of this stuff so that you convince yourself that though the scent of victory is in the air with high leverage and it's available to you out there, and you want to do that because you want to make a lot of money real quick, let me talk to you about the risk of ruin. Not to make you feel stupid, but to educate you. I'm an educator. That's what I do. If I can help you without you taking a course or paying me any money, that's great. I've done, as an educator, the best thing that an educator can do, is help you. However, if you need me to help you understand the full breadth and depth of a good trading plan and risk management, then we need to talk about process-oriented trading, which is what I teach in my Fast Track course. Regardless of whether you're interested in taking a course or just getting some information from me, I'd love to just chat with you as a fellow trader, try to make you see maybe what you're doing now that you could change without taking a course that might help you. If that interests you, throw me an email. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.